everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Futures Market Outlook, where we take a look at our big markets that we trade on the future side of things, and we look to formulate an attack plan for tomorrow's price action. Now, tomorrow, when we're looking at tomorrow, and that's going to be for the 2nd of June, we had kind of an interesting day, a little bit of an oddball. We did get some movement, but it really felt like the day was still kind of slow and grindy, and then it would pick up and go crazy for a little bit, and then it would be slow and grindy again. It was just kind of a funky day overall, with the movement sort of being all over the place. Now, before we jump in, as always, make sure to swing on over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. That's going to allow you to sign up for our email list, so we can email you every single time one of these videos comes out. Along with that, in that newsletter, we talk about all kinds of different stuff, from statistics to just general good information. Obviously, I may be a little bit biased there. Along with Forex, cryptocurrencies, which have been really hot lately, and pretty much everything in between. So a great little newsletter to get your hands on. At the bottom of the page, every single day in the blog section, we talk about two different things. We have two blog posts. The first one is in the morning, where we cover the major levels of support and resistance for that day. So a great one to pick up if you are looking for some strong levels. And then, of course, in the afternoon session, we look at our market psychology or trade of the day video, where we take a look at what's going on and look at an example of seeing, you know, what we're looking for every day in action. If you haven't done so already, make sure to click on the live trade room subscription and trial info. That will let you sign up for a one-day trial, so you can sit down with us, see what we're all about, take a look at the live trade room, and see how we navigate these markets of ours. Of course, if you really enjoy it, you can always sign up for a weekly or monthly subscription, and if you join as a full-fledged VIP member, you get the live trade room as part of the package. Now, taking a look at the euro, for the most part, really grindy. You can see just a huge amount of up and down, back and forth, back and forth, back and forth. But it did wind up getting a little bit overextended down here, and with that overextension, that puts in a huge level of support at 12,140. Now, at the high of this area, when the buyers finally started kicking in, they ended up getting a little bit exhausted as well, and that puts in an area of resistance up at 12,345. And it's pretty obvious what that creates, right? It creates a big old wedge that we're going to have to deal with now, and probably a range. The range low may even migrate up a little bit higher. We can see that the buyers are defending early down here, so it wouldn't necessarily be a surprise to see a range narrow in a little bit. But right now, the anticipation is that we continue this bearish trend, but we're probably going to go into a range for a little while, maybe in the overnight session, maybe even into tomorrow before we really start kicking off. So overall, mostly range bound, but I wouldn't necessarily mind seeing some good deviations outside of these lows and highs to find some selling or buying pressure. And of course, if you zoom out, you always want to keep an eye on the general bias. At this point in time, the general bias is bullish in the short term, and mostly range-bound to bullish in the long term. So really, all things considered, I would much prefer to see a dip below the lows and find some buying pressure. Today might just be what you would consider an accumulation day, where a lot of big traders, a lot of big funds are accumulating the market on the way down, so they can distribute it a little bit later as the market goes back up towards the highs. So definitely something to keep in the back of your mind. Looking at gold, gold did a lot of moving today, but it really didn't accomplish a whole lot. We had a lot of back and forth, once again, just all over the place. Now, obviously, there were a couple pieces of news here at 8:15 and 10 o'clock that really kind of threw the markets around a little bit. I mean, draw the arrow on 10 o'clock this time. There we go. So with all of that back and forth, really, we like taking a step back and just seeing, you know, what did the day accomplish? We opened up here, and we're going to be closing right there, roundabout, and that's a very ugly looking daily candle, right? It's a bear candle, so this is all shaded in, the wick on the highs, and then this big nasty wick on the lows, and it's bearish, right? Just a really ugly looking candle for a daily, and for the most part, that kind of paints a picture of what we saw today. Really choppy, sloppy, lots of movement all over the place, but really not getting anywhere in terms of accomplishing any objectives. Now, at this point in time, we do still have a strong upside objective for the buyers to complete up at 1272, but we have a large area of resistance ahead of that at 70.8. The only way that the buyers are going to be able to get up to that 72 area is they need to break through 70.8. That is a huge level of resistance, and as long as that stays intact, they're going to have a really hard time, and if they fail, then we're expecting a deeper correction. Now, a deeper correction, that could mean as low as 68.1 or even all the way down back to 64.3 again, with several levels of support in between. Either way, though, still looking to buy in the short term just for that finishing move off to get that final objective done, and then maybe we can switch back into range mode and start looking to sell the highs. Overall, again, we always want a general bias of what's going on. It is bullish in the grand scheme of things, and we are kind of grinding our way towards that larger channel that we've been talking about for the past couple days. Came very close, but we've missed it so far. They may just be looking to kind of complete that, and once they do, we may be off to the races once again. Overall, though, still looking to be a buyer, but a little bit guarded, preferably at better prices where possible. Over on crude oil, something we don't see very often at all, an expanding megaphone, right? We have a megaphone high and a megaphone low all the way from the early morning session, or I guess afternoon session, depending on where you live. And that has held really well. The lows are holding beautifully, the highs are holding beautifully. We're just kind of cycling right now. We're at the lows, so we are looking for potential longer term buying, at least back up towards around this cluster of monthly and weekly resistance between 48.63 up to 48.78. Now, we do have a downside objective. If you notice that at the bottom of the screen down at 47.51, the sellers do still have an objective to the downside. The one big problem is simply the fact that we have the megaphone that we're dealing with. If we can start breaking away from that, I wouldn't necessarily mind seeing a breakout pullback and then a drop in to finish that objective and then cycle back up towards the highs. But right now, major level of resistance, 48.26, and if that starts breaking, then we're looking back up to that cluster of resistance above and maybe even back to the highs of the megaphone. Right now, though, kind of treating it like a range overall. It just kind of fits as a range. Zooming out a little ways, we can see that the bears definitely have the bias. So not really much else to say other than I would rather be a seller than talking about buying right now. But that said, this area down here has been a big area of support, and we're there again. So lots of areas of interest for us to work with, mostly just a range on the bigger picture with a slight downward bias. I would prefer to sell if possible, but sometimes the market doesn't give you that option. And then finally, on the S&P was an absolute train wreck for most of the morning. From 6 p.m. when it opened up in ETH all the way until about 9:30, we moved 4 points. It's just an abysmal market to have to sit around and watch. But once things started kicking off, once we got that movement, the market didn't stop. We had that big breakout, right? We broke out of that kind of funk that we were having, pulled back, tried it again, and then stalled out in this just gorgeous looking wedge. And then it was off to the races after that broke, and they haven't looked back. Just massively bullish pressure working to the upside, and they are still doing it, right? End of the day, and another big rally. Biggest rally of the day. And if you're familiar with what we talk about, that's a pretty good sign that we may be nearing a potential correction sooner than later. So I'm looking for a correction down to 24 quarter. We could also be looking for that upside objective that still is open, right? It still is open up at 24.33 3/4. The buyers basically right now, they're going to have a hard time buying high where we are right now. They're going to want to buy a pullback to get as good of a price as possible so they don't have to deal with all of this kind of choppy, sloppy stuff all the way at the top. So in that case, looking for that nice pullback below 24.25, see if we can get that bounce back up to finish that objective off in tomorrow's session. So that's going to do it for the outlook. Not a whole lot going on today, except for the, lots of range-bound movement, lots of chop and slop. Yeah, the general, what we're kind of used to hearing about. Now, tomorrow, we do have a decent amount of news, but most of it is early, right? Now, tomorrow being Friday, we do have some of the bigger announcements that usually come out on Friday tomorrow, so definitely something to be very careful around. At 4:30 tomorrow morning, out of the UK, we have the construction PMI, forecasted at 52.7. Previous was 53.1, and then we got the big ones, right? We got the big ones, non-farm payrolls at 8:30, forecasted at 185,000, previous 211,000. Unemployment rate, also at the same time, 4.4% is the forecast. That is the same as previous, and those are the big ones that we get generally throughout a month, and they're happening tomorrow, so we have to be very careful. A couple things to take into consideration that since tomorrow is NFP day. We have non-farm payrolls, we have the unemployment rate, and this was a holiday week, right? So a lot of traders are going to be pretty juiced up going into the end of the weekend to get back to their, to get back to their campgrounds or wherever they're hanging out this past weekend. Probably going to want to go back this weekend as well with all this news and stuff going on. So just play it really safe. Like we always say, make a plan, trade the plan, follow the rules, and you should be A-okay. Until next time, we'll see y'all then.